Well, and you mentioned the BB&T deal, and you were saying, oh, small regional banks, but actually, I mean, this creates the #6 biggest bank in the U.S., which is not nothing. And actually, when that deal was first announced this morning, you saw both of those stocks were popping, but obviously, it's a day that reminds us that China and concerns about China and concerns about trade are what have the power to just kind of ruin everything, to ruin what could have been a positive day with some interesting news. You know, fears about China back in action. And as you said, for a couple weeks now, we've seen some great days where we say, oh, okay, I guess it's all quiet on the China front. No news is good news. And we just hear more of, oh, a meeting's coming. But then when certain optimism gets dashed, like Trump indicating actually nothing's coming, no meeting, like what Kudlow said, you know, don't expect too much on the horizon, everyone gets spooked.
Yeah, what I find interesting about just like the whole setup right now, this tension between the markets and the economy, to me, bank M&A is kind of a bullish sign for the economy, right? These are two more consumer-facing banks. They're saying our business is in a position right now where we think we're going to be stronger together. You know, everyone says that about their M&A deal, right? But it's very difficult to go out and get a deal done if you feel like the conditions are getting worse. We'll keep hearing about more investment. We'll get to Twitter later in this block, but we heard from Alphabet recently. We heard from Amazon recently. We've got a lot of companies that seem to feel good about their competitive position, and yet the market still feels levered to trade, which on an absolute dollar basis isn't a huge deal. But obviously the sentiment is going to be driven by that, regardless of what the data sort of tell us.
I mean, trade obviously front and center, but I do think what's really interesting about this deal is diving into how big it costs technology is for financial services. These guys need it for scale, and it comes back when you look at Wells Fargo today. So they had their app down for a time being. They had online banking down. Do you know how much money these banks are spending on cybersecurity and making it so that you can go online and pay your babysitter someplace instead of paying Venmo? I mean, it's like 20% of Citi's entire budget is on tech spending. JP Morgan spent almost $11 billion on tech in 2018.
Not to mention,
It's
Wells
crazy.
needs its app down like a hole in the head. I mean, my God, if there was any company that didn't need this to happen. But you're right, when it's a simple app outage for something like a social platform, fine, I didn't get to Instagram today. But when the app is down and it's a bank, well, that's a major problem. We saw what happened with Robinhood recently. You know, Robinhood, the millennial stock trading app, they had a day-long outage. SEC got involved, had to pay back a lot of losses to users. So that's a major problem.
But think about all these regional banks and the spend that is involved in that, and the margin compression that's there, the huge challenge. And it's really not just them. This is happening to so many industries.
And what's one of our hottest sectors recently? Software.
Software,
There you go,
right.
right?
They got to go hire all these
It's the
people.
B2B.
Yeah,
B2B.
picks and shovels.